You may be thinking, why do I have to do all this when I have a divorce decree? Well, I am in the state of Kentucky, and last time I checked, federal law trumps Kentucky law. So, yes, there are things where states have rights, they can set certain laws, but just because you can claim something on your Kentucky tax return doesn't mean that it's going to be the same with the IRS and vice versa. For example, in 2020, when we saw the exclusion of unemployment income, the IRS didn't tax you on the first $10,200, but guess who did? I'll give you a hint. Kentucky sure did, as well as other states. So your divorce decree in whatever state you live in is going to be state law, and IRS is federal government. So the federal government is always going to trump state and local government.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, I'm back in the podcast studio for episode 19, and I am excited because I have stats, I have facts, and as you know, I love tax law. Now, forgive me again, because this is one of those topics I didn't realize was so confusing to people because, again, I love stats. I love tax law. So what we're going to talk about today is something that is actually very common when it comes to filing returns for people with families, but I didn't realize that the families don't necessarily understand what's going on with this. And unfortunately, I've seen a lot of my fellow tax professionals be confused and actually mess this up as well. Today's topic is which parent should claim the child on taxes. Now, I stumbled upon this maybe 2 to 3 years ago, and no, remember, I've been doing this since 2011, so I didn't stumble on parents trying to figure out which one should claim the child, but I stumbled upon a study done by the Pew Research Center, and I didn't realize the United States has the world's largest, or I should say highest, rate of children living in a single-parent household. I was like, what? Now, of course, I've only lived in the United States. I didn't have anything to compare it to, but it still shocked me. But that means that as of the day of the study, 23% of people in the United States under the age of 18 live with one parent and no other adult. Now, in my mind, and probably in yours too, with that information, it should be pretty straightforward who should get to claim the child at tax time. But just like all things tax, unfortunately, it's not. It's not straightforward, especially in situations where we have parent separation or divorce and it wasn't cordial. You know, everybody doesn't have the fairy tale ending where we're all best friends, right? So what we're going to look at in today's episode is what the IRS definition of a custodial parent is. We're going to look at the tiebreaker rules, and these are going to be tiebreaker rules that the IRS set. And you all know, like, the IRS rules are Bible truth, so that's what we got to go by here. And then we're going to look at the form you can fill out so that if you're the non-custodial parent, you can still claim your child on your tax return. Okay? So if you've been to family court, if you know anything about family court, you are probably thinking, well, the custodial parent gets to claim the child. Duh. Well, like I mentioned, with everything tax, it's not that straightforward. The definition of custodial parent that may be in your family court documents is not the IRS definition of custodial parent. According to the IRS, the custodial parent is the parent the child lives with most nights, and this parent is the one that gets to claim the child on their tax return. So literally, I have clients, I've worked with taxpayers who were trying to, fix it after the wrong parent claimed the child, where they keep a running record of which nights the child stayed in their home. Because if we're looking at it and presenting something to the IRS, that is going to be proof that they're going to look for to substantiate your claim to the child. And yes, I know I talk about substantiating things and having a third party to do that for you. But remember, whenever we are talking to the IRS, we need to prove our point, especially when it's something that they may not allow. So again, it's going to be the parent the child lives with most nights, and this parent will be the one to claim them. Now, if the child stays with both parents equal nights, the IRS does have tiebreaker rules. And remember when I was mentioning that log? Yes, the IRS takes into consideration when they were outside of the home. So summer camp and all of that, we can really get down to the nitty gritty. But let's check out these tiebreaker rules, okay? But before we do, you may be thinking, why do I have to do all this when I have a divorce decree? Well, I am in the state of Kentucky, and last time I checked, federal law trumps Kentucky law. So yes, there are things where states have rights, they can set certain laws, but just because you can claim something on your Kentucky tax return doesn't mean that it's going to be the same with the IRS and vice versa. For example, in 2020, when we saw the exclusion of unemployment income, the IRS didn't tax you on the first $10,200, but guess who did? I'll give you a hint. Kentucky sure did, as well as other states. So your divorce decree in whatever state you live in is going to be state law, and IRS is federal government. So the federal government is always going to trump state and local government. Okay? So let's get back to the tiebreaker rules. If both parents keep the child under their roof for an equal amount of nights, the IRS has these rules in place to make it easy for you to figure out who should claim them. Again, if there was no cordial breakup, you may go back and forth, but these tiebreaker rules are something you'll want to equip your attorney with to go ahead and take it to court. Tiebreaker number 1, we're looking at the parent with the highest adjusted gross income, also known as the AGI. Now, this is going to be your income after above the line deductions. I'm not going to go into a lot of detail about that now, but you can check out my YouTube video or blog post, 15 tax terms that every taxpayer should know. I go into more detail about what the adjusted gross income is and what goes into factoring that. Tiebreaker rule number 2, the person with the highest AGI if no parent can claim the child as a qualifying child. There are situations where the parents do not have custody of the children, so they cannot claim them as a dependent. Just because they are the parent does not mean they automatically get to. An example is a grandparent claiming a grandchild, or this also could be a foster parent claiming a foster child, okay? The third rule, a person with an AGI higher than any parent if the parent can claim the child as a qualifying child but does not. So what this would look like, and I have experienced this, well, maybe I should say I know people who have experienced this. I don't have any great-grandchildren, but I've seen where grandparents, great-grandparents, great-uncle, great-aunt, they step in and they actually have custody of the child if their adjusted gross income is higher than either of the parents and they do not claim them, then that taxpayer can claim the child on their tax return. Now, remember, with these rules, keep in mind, this does not stop anyone else from claiming your child. Because we have the e-file system, what happens, it doesn't let there be duplicate claims of the child. It's kind of a race and it's a test of integrity, because what happens, people know when they shouldn't actually claim the child, but sometimes they still do it anyway. I'm going to tell you what to do if that happens in your situation. But let me get to that last. The next thing I want to do is talk about how the non-custodial parent can still claim the child. So as I mentioned, every separation, every divorce doesn't end cordially. But if it does, and you and your spouse, or if you're listening to this on behalf of a client, if things are cordial right now, that doesn't mean that it'll be cordial tomorrow. It doesn't mean it'll be cordial next year. I had a client, I'd say about 5 years ago, and he was just like, yeah, we're still really good friends, and I'm going to claim the child this year. She's going to claim the child that year. And guess what happened? He decided to remarry, and they were no longer friends. And guess who had trouble with claiming their child? Yeah, you guessed right. So what I had advised him to do, and what the IRS has created, is Form 8332, and I had advised him to get this signed by his ex. Now, with Form 8332, and I was just talking about this form, I don't know why I'm stumbling now. What it is a release or revocation of release of claim to an exemption for child by custodial parent. I know that was a mouthful, so I'll say it again. It's a release or revocation of release of claim to exemption for child by custodial parent. So if you'll go back with me a moment, before the Tax Cut and Jobs Act, we had exemptions for individuals, which included children. What happened under that act is now we no longer have exemptions, but the child tax credit was expanded and the standard deduction was doubled. This form is still going to be relevant, though, because what the form allows the non-custodial parent to claim for the child is the child tax credit. They can also claim the additional child tax credit, which, again, I'm not going to go into a lot of detail with that, but the main difference with the child tax credit is it is non-refundable. The additional child tax credit is refundable. The article I mentioned earlier, or you can look at the YouTube video, 15 tax terms every taxpayer should know. I do go into more detail to define the child tax credit and the additional child tax credit. If you are a parent and you qualify, believe me, you want to claim those on your tax return. So with Form 8332, again, the non-custodial parent can claim the child tax credit, the additional child tax credit. If the dependent is or is 17 or older, you can also claim the credit for other dependents and any applicable education credits. So that is the lifetime learning tax credit, the American Opportunity Tax Credit. And the American Opportunity Tax Credit is actually refundable, which the lifetime learning is not, but it's still a credit. So we're looking at reducing your tax liability, the amount that you owe dollar for dollar. So that's something most definitely, if you were the non-custodial parent, you're going to want to have that 8332 in your back pocket to prove that you can actually claim your child for those years. What the form does not allow the non-custodial parent to take advantage of is the head of household filing status, the earned income credit, and the child and dependent care credit. So if you're the non-custodial parent, you cannot claim the cost of things like daycare and summer camp on your taxes. Now, remember I said keep it in your back pocket. You'll want to make sure that you have it in your back pocket so the years that you and your ex have decided that you can claim the child, you have that, again, I'm going to use the word, to substantiate that you have the right to claim them that year. So on this form, it will state what years the custodial parent is giving up their right to claim the child on their taxes for the specific tax year or years. Now, when I let that mouthful out, remember at the beginning I said it's the release or revocation of release. If something happens where things have gotten even worse and the non-custodial parent can no longer claim that child, the custodial parent can fill out another 8332 to take back that release of claim. That is not within my wheelhouse. That's something where the attorneys would need to help you figure out if something has taken place where that non-custodial parent has lost that right or privilege to be able to claim the child. Until a release or revocation has been filled out, the IRS is going to go with their tiebreaker rules, not what your divorce decree says, not what the family court papers say. They're going to go with their rules only. Okay? So I mentioned earlier, what do you do if the other parent, or maybe it's a grandparent, foster parent, what do you do if they've claimed your child and they didn't actually have the right to? Well, the IRS has a form for that too. You won't be able to e-file, but when you send this in by mail, the process will start for the IRS to begin looking at both returns. You will want to complete Form 866-H-DEP. DEP is standing for dependent. This form will tell you exactly what supporting documents you need to provide to claim your dependent. And yes, you will have to provide supporting documents, because remember, we're dealing with the IRS, so you always have the burden of proof. If you do have a divorce decree and it's going to back your position, as well as that 8332, attach the relevant pages of the decree, including the first and signature pages, to the mailed return. You're going to want to print your tax return, and remember, you're going to need all your source documents for income and deductions. So those are things like your W-2s, 1099, student loan interest, etc., along with the Form 866-H-DEP, and mail all of your documents to the IRS based on the address on your tax return. Then you'll want to send this documentation to your state agency as well. So after you've done your part, because remember, when we work with the IRS, even if you're working with a professional, I always say, I can't work unless you do. Same thing with the IRS. They can't get anything done unless you do your part, and make sure you send everything to them correctly the first time. They'll review your return as well as the return that was e-filed that had a claim for your child. First, they'll apply the tiebreaker rules to see who rightfully should be claiming the child. This is why it's important to include all of your supporting documents in your initial communication with the IRS to cut down on the time they need to process the return. You will not get the same turnaround as e-filing a return, which is typically 21 days. This will be quite a bit longer. So if you are the non-custodial parent, according to the IRS, but do not have a court order to claim the child on taxes, make sure you have your 8332, because let's say the custodial parent does go ahead and claim the child. If you have that 8332 and it was technically your year, you're going to want to attach that with the forms I mentioned earlier to show that they circumvented what was already signed, which again, Form 8332 is going to be a tax document, which is going to trump anything state or local, and that will help the process go a lot smoother. Now, I hope this was helpful for you. I tried my best to break down the taxonomies. I don't know if you can tell. I know that, fighting with a parent is not a happy place. I'm not trying to minimize that at all. But again, I'm excited because I had the stats, I had the facts, and the tax law. Now, if you're dealing with this situation right now and you need a tax professional to help you, you want to make sure that you are working with somebody that is qualified, that has done this before. Because unfortunately, as I mentioned earlier, I've seen so many tax professionals and attorneys actually mess this up as well. You're going to want to make sure that you vet that tax professional, which, if you don't know how to do, you can check out an earlier episode I did on how to choose a tax professional. Now, keep in mind, don't get frustrated. You need to breathe. When your claim to a child is taken away, sometimes that causes you to have a tax liability. Don't just take it as that. Breathe. Remember, back taxes shouldn't ruin your life. You now know what you can do to put that claim for the child back on your tax return, and you're going to get this tax problem behind you. If this episode, maybe you thought it was cool too because you got excited with me, but it does not apply to you, will you please do me a favor and share it out? Maybe your friends or a loved one are dealing with this and you just don't know about it. Not only will you help them, but you'll help me on my mission to fill the tax literacy gap one taxpayer at a time. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.